Simplicity makes for less stress and more happiness. My friends, let's keep it simple what we do here. As I'm teaching my Accelerated Market Mastery course, we're about halfway through the course, and I keep emphasizing, I'll share with you, one of the little tips that we concentrate on so much is simplicity. If you can attempt to practice trade and earn 2% a month. Now remember, so far this year we have had 13 weekly vertical crossovers. 12 of them have been highly successful. If you could focus on just on average earning 2% a month, compounding that throughout the year. Now again, we don't even ask that you even get up to 2% if it's just on average 20% a year. But in this example, it's 2% a month. For 12 months out of the year, you're putting back $1,000 a month. How many of you could find $1,000 to save and put into your, again, we're talking about your virtual account and practice trade it? If you did that consistently over the course of 20 years, do you know what that turns into? $3,537,562. If you made more than 2% a month, of course, it would be considerably more. So why do we urge you to practice trade, to work hard at this? Again, 2%, you guys who've been successfully practice trading, you can do 2% a month standing on your head. So again, practice trade, study to show yourself approved, pay attention to the numbers. They're beautiful. What does it require though? It requires that you put in the time. There is no magic to this. We keep it simple so we can follow the weekly vertical crossovers to success. We want you to practice trade with us. We're not a stock calling service. We're an education firm, but we're all about educating you to read these stock charts. You should be excited every day about what's going on in the market. This summertime trading zone, which is typically horrible, has been incredibly good. Look at what the market has been doing. It's up again today. The S&P 500 up 1.01%. Starting the week off with a higher high, looking beautiful. Price percent oscillator heading up, derivative oscillator gaining upward momentum on that weekly chart today. Look at that candle forming. First day of the latest 2-day candle moving up. Derivative oscillator gaining momentum. It had been moving down. Price percent oscillator moving ever so slightly away from the red signal line. Price above the weekly and above the 2-day, well above the weekly, looking good so far. What do we see on the 4-hour chart? Up in the morning, the 195-minute half-day chart. Up in the morning, further up in the afternoon. And how did we end? We ended with a crossover moving up. So we shall move around our trend line on the 4-hour chart, and we'll just sort of show where that up movement springing off the 2-day trend line. So that's good to see. That's where we are now. What's up with the Qs? For those of you who were paying attention on when? Friday afternoon, when we had the 2-day crossover. We start the week off with a higher high, up 0.62%. Price percent oscillator is continuing to move up. Derivative oscillator gaining upward momentum on that weekly chart. Look at that 2-day chart starting off with a bang, moving right up the 2-day trend line above the weekly. We can see where things are slowly pulling away. Now again, not my favorite move, not a huge fan of 2-day recrosses, but we do have one underway. We have a weekly chart that's still heading up nice and strong. We see the derivative oscillator moving up, price percent oscillator pulling away from the red signal line. Look at the half-day chart. We see up in the morning, a little bit of a pullback in the afternoon, but price sitting. In fact, let's find where that is. Let's redraw that a little better. I like to keep our trend lines accurate. And oh, that's beautiful. We got 4 candles moving up, but we do have a slowdown in the up movement in the afternoon, so keep your eye on that, particularly if you're just jumping in to that 2-day recross practice trade. We'll continue to keep an eye on that. Let's go to 20-year bonds. What do we see going on there? Down for the day, 0.16%. What does the Heikin Ashi candlestick show as far as average pace goes? It shows us that there's a slowdown in the down movement. We can see that with the price percent oscillator. Derivative oscillator still gaining downward momentum. And again, bottom up, top down is how we draw our trend lines. And let's see if we can't bring this trend line a little more up to date here on the weekly chart. We will goof around with that a little bit. Put that in the right place when they're so close together. It's a little harder to do. There we go. But again, TC2000 is amazing. We can see prices still below the trend line there. And that green, solid green means, again, a slowdown in the down movement. So we'll continue to watch. We go to the 2-day chart. What do we see there? We see that that 2-day is again moving up in the morning, moving up in, in the morning and the afternoon. It's the first day of the latest 2-day candle. That's where the average pace is showing us, even though we understand price is down, the way the Heikin Ashi candlesticks, and for those of you who are new and don't understand Heikin Ashi candlesticks as opposed to the high open, low close of the typical Japanese candlestick, these are formulated in a different way. We explain that in the training on Heikin Ashi candlesticks. I'll put that at the end of today's program for you. We do have a special training for all the subscribers, and you can subscribe for free to get these. This one is fundamental analysis is fine, but don't be a dumb buyer. What we're talking about is being smart, using the charts to make sure you're not buying high and selling low, that you're doing it the smart way. So we want you to practice trade with us so you understand what actually is going on. So we have a green up candle that is forming, so we can see the average pace of price movement there. We can also see where the price percent oscillator is again not heading down in the strong angle it had been previously, but again is moving down a little more than it had been. It had been pretty much flat. Derivative oscillator losing some downward momentum still. We go to the half-day chart, and that's where you can see the up movement in the morning and then the pullback in the afternoon, pushing right there through the 4-hour trend line. So again, we'll continue to watch, see what there is to see here and learn here on the 20-year bonds. Remember, we did have that 2-day recross going down all the way back on the 11th. That did well for 4 days, and then it's sort of teetering around and starting to move up. So again, we've talked about caution there. Now, lastly, we go to gold. Gold down for the day 0.57%. It was our biggest downer for the day. What do we see going on with gold? Well, we had the peak in gold back at the beginning of August, the week ending the 7th of August. Since then, gold has devolved, sliding sideways and down, starting the week off with a down candle. Now, hasn't crossed over going down yet. Derivative oscillator going to its 4th week of down movement. Price percent oscillator heading down, but still positive at this point. 2-day, of course, crossed over back on the 2-day candle, ending on Wednesday, the 19th. Big down candle Thursday and Friday, and this one is a slowdown in the down movement. That price percent oscillator, however, is still heading down. Derivative oscillator gaining downward momentum. What do we see on the half-day chart? Sort of some indecision in the morning, followed by down movement in the afternoon. So we're just going to see which way gold goes. Is it going to be a crossover going down on the weekly that will get us into a down move, or will at some point we have a 2-day recross going up that'll get us back into an up move in gold? Don't know. Don't really care. We'll do whichever the market decides to do. That's what trend following is all about. You can't make the market do anything. The market will kill you if you don't follow the trend, and that's all we're about. It's that simple. Why? Because simple makes sense. As the quote for today says, simplicity makes for less stress and more happiness. And that's exactly right. That's where we are, folks, as we end the day on Monday. Sending out a bunch of books today. Thank you so much for all the purchases, Charting Your Way to Wealth. We're actually going into our, 6th printing on the 2nd edition. If you don't have a copy, you want to supercharge your training, we've got one for you. Also, for all of our Patreon supporters, thank you for everybody who signed up lately. If you've not checked your email, we have sent you Options Made Simple, the Charting Wealth Way. You've gotten that in your feed, in your email. So please check it. If you want to be a Patreon supporter, follow the link in the show notes. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.